but we're talking about pot stocks, investing in them. And I think people are interested in it. So people want to know, is this an emerging growth opportunity? Is this an opportunity to make a lot of money? And is it worth getting into? Because you could see the growth and no one's really captured the market yet. And all of a sudden, the companies that survive, because we had a bloodbath in the sector. It was up and up and up 3 or 4 years ago. The stocks crashed. Nobody paid attention to them until recently started going up again. But the strongest ones are the ones that have survived. These companies are looking more and more like legitimate, real companies. And we have to take a look. This is a terrific website that a lot of people use to do research for exchange traded funds. It is ETF.com. And these are the 9 ETFs in the industry. The smallest one is $15 million under management. The top ETF, the symbol is MJ. It used to be called the Alternative Harvest Fund, and that has about $1 billion. And then there's the advisor, Pure Cannabis. It's for U.S. companies. That's got 162 million. And then they get a little smaller on down the road. And you see the expense ratios. The top ones are 0.75, 0.74, 0.7. The reason you go with an ETF is so you could avoid having to pick 1 or 2 individual stocks, which might be the losers in the group. At least with the ETF, you're diversified. Now, diversification is a strategy that we use to reduce risk, but it doesn't protect your portfolio from a generally down market. But I think that goes especially for the sector. So if the sector goes down, these stocks are going down hard. This is a very speculative sector to be in. I think pot stocks are very aggressive. This is the MJ ETF. And if you look at its holdings, it's not necessarily all in cannabis. It's got some land, it's got some fertilizer companies, etc. This is YOLO, you only live once, is the ticker symbol. And this has got some derivatives in it. It's actively managed. But YOLO is up 35% year to date. So when I say that, it gets your attention. The MJ Alternative Harvest ETF is down 11%. And the other big one is THCX. And that one is up 1% on the year. I think that you could take really a shot on any one of these. But if I was to take a shot, YOLO is actively managed. So you've got a fund manager picking, buying and selling the stocks. And I think the sector is new enough that you could have active management in it. And obviously the actively managed fund in the space has done really well. THCX is based on their own proprietary index. They rebalance the portfolio monthly, which I think is a little too much, because if you keep rebalancing, you're never really giving your stocks a chance to really run. So I'm not really into something rebalancing. And they use artificial intelligence to pick the stocks and change the index, and they gauge investor attitudes toward the individual pot stocks. You have to view this as an emerging growth sector, which typically has big ups and downs. If we don't get an approval on the federal level in the United States, then I think that keeps a lid on the sector, and this sector will trade up based on hope of a approval on the federal level. If we do get the approval, then I think you've got a lot of winners.